Here's a summary of the Palo Alto Networks, PANW, 2025 Q4 earnings call, focusing on key financial metrics, management's outlook, risks, highlights, and important statements from the CEO and CFO. Introduction and overall performance. Palo Alto Networks closed fiscal year 2025 with a landmark quarter, demonstrating strong execution and strategic acceleration. The company achieved a significant milestone, becoming the first dedicated cybersecurity company to surpass a $10 billion revenue run rate. This performance is attributed to a long-term strategy of anticipating market shifts and building future-ready cybersecurity platforms. Key financial metrics for 2025 Q4. Total revenue, $2.54 billion, a 16% year-over-year increase, exceeding guidance. Product revenue grew 19% year-over-year, driven significantly by software form factors. Services revenue grew 15% year-over-year, with subscription revenue up 17% and support revenue up 11%. Software form factor mix. 56% of product revenue in Q4 came from software form factors, a key growth driver. On a trailing 12-month basis, software surpassed 40% of product revenue. Next-generation security, NGS, ARR, reached $5.58 billion, a 32% year-over-year increase. Net new NGS ARR added approximately $490 million in Q4, up 12% year-over-year, with strong contributions from software firewalls, SaaS, and XSIAM. AI ARR stood at approximately $545 million, more than 2.5 times year-over-year growth. Bookings growth turned a corner, reaching the highest in 2.5 years, driven by platform deals and strong renewals/upsells. Remaining performance obligation, RPO, grew 24% to $15.8 billion, the highest growth in 7 quarters. Current RPO was $7.0 billion, up 17%. Total gross margin, 75.8%. Product gross margin, 76.8%. A reserve for excess and obsolete inventory was taken, considered a prudent step for future positioning. Services gross margin, 75.5%. Operating margin, non-GAAP, expanded by 340 basis points in Q4, exceeding 30% for the first time in the company's history. Annual operating margin was 28.8%. Diluted non-GAAP EPS, 95 cents, ahead of guidance. Free cash flow, SCF, margin, 38% for fiscal year 2025, marking the third consecutive year above 38%. Management sees structural visibility for even higher SCF margins. Management's forecasts and future outlook. FY 2026 guidance, standalone, excluding CyberArk NGS ARR, $7.0 billion to $7.1 billion, 26% to 27% growth. RPO, $8.6 billion to $8.7 billion, 17% to 18% growth. Revenue, $10.47 billion to $10.525 billion, 14% growth. Operating margins, 29.2% to 29.7%. Diluted non-GAAP EPS, $3.75 to $3.85, 12% to 15% growth. Adjusted free cash flow margin, 38% to 39%. Q1 2026 guidance, NGS ARR, $5.82 billion to $5.84 billion, 29% growth. RPO, $15.4 billion to $15.5 billion, 23% growth. Revenue, $2.45 billion to $2.47 billion, 15% growth. Diluted non-GAAP EPS, 88 cents to 90 cents, 13% to 15% growth. Product revenue growth expected to be approximately 20% in Q1 FY26 and in the low teens for FY26, driven by software form factors. Seasonality. Top-line seasonality is expected to remain second half and Q4 weighted. Combined company, Palo Alto Networks and CyberArk targeting over 40% adjusted free cash flow in FY28, post-integration. More details on synergies will be provided after the transaction closes. Long-term vision. Continuing to aim for $15 billion in NGS ARR on a standalone basis by FY30. Significant risk factors. CyberArk acquisition integration. While optimistic, the successful integration of CyberArk and the realization of synergies are crucial. Macroeconomic conditions. Although management stated the macro environment is fine, ongoing geopolitical and economic uncertainties can impact IT spending. Execution on strategy. The company's continued success hinges on the disciplined execution of its platformization strategy and go-to-market expansion. Competition. The cybersecurity market remains highly competitive, and ongoing innovation is critical to maintaining market leadership. Pace of AI adoption. While a tailwind, the rapid evolution of AI also creates new attack vectors that require constant adaptation. Highlights. Surpassing $10 billion revenue run rate. A significant financial and market leadership achievement. Bookings growth acceleration. The strongest in 2.5 years, indicating renewed customer demand and confidence. Platformization traction. Customers are increasingly committing to integrated platforms, leading to larger, strategic deals. Large deal momentum. Significant growth in customers with $5 million plus, $10 million plus, and $20 million plus ARR, including a $100 million platformization deal. SaaS leadership. Continued strong growth, displacing incumbents, and winning the largest SaaS deal to date. Prisma ARS launch. Positioned as the industry's most comprehensive AI security platform, driving strong pipeline and early adoption. XSIAM performance. Fastest growing offering, drastically reducing mean time to respond and achieving significant customer adoption. Software firewall strength. Dominant market share and significant ARR growth driven by multi-cloud adoption and native integration across cloud providers. Operating margin expansion, exceeding 30% for the first time, demonstrating strong scalability and financial discipline. Free cash flow strength, sustained high margins, with increasing visibility for future cash flow generation. CyberArk acquisition, strategic move to strengthen identity security capabilities and define the next chapter of cybersecurity. Near Zook's retirement, acknowledgement of a transformative leader, and a smooth transition to Leclerc. Lowlights. Product gross margin reserve. While explained as prudent, the reserve for excess and obsolete inventory indicates a need for careful inventory management. Hardware firewall growth. Expected to remain in the mid-single digits in FY26, indicating a continued shift away from traditional hardware. Most important statements. Nikesh Arora, Chairman and CEO on Strategy and Market Position. We've just closed a landmark quarter, capping a year of disciplined execution and strategic acceleration. Our results this quarter are a direct reflection of a strategy we have been architecting for years, anticipating where the market is going and building the future of cybersecurity before it arrives. On platformization and customer commitment. The record-breaking number of platformization deals this quarter demonstrates that customers are not just buying products, they are buying into a strategic partnership. We believe that integrated best-of-breed platforms deliver superior security outcomes, and our customers are validating this conviction by making larger, more strategic commitments with us than ever before. On AI and the new attack surface. The very fabric of technology is being rewoven by AI, creating a vast, new and complex attack surface. In this new acquisition, we are strategically entering this category now to define the next chapter of cybersecurity for the AI era. He emphasized that identity is a key enforcement point, and with the rise of agentic AI, the identity market is expected to inflect. On Nir Zuk's legacy, our founder, our first innovator, and a true titan of this industry, Nir Zuk, has decided to retire after more than 20 years. To Nir, on behalf of every single one of us, thank you. On Lee Klarich's new role. This marks a seamless and natural transition as we pass the torch to Lee Klarich, who will now serve as both Chief Product and Technology Officer and as a member of our board. This ensures the soul of our innovation not only continues, but accelerates into the future. Deepak Galeka, Chief Financial Officer on Financial Performance. In Q4 25, total revenue was $2.54 billion and grew 16%, above the high end of our guided range. He also highlighted the significant operating margin expansion, exceeding 30% for the first time. On product mix and software growth. On a trailing 12-month basis, the proportion of our product revenue from software surpassed 40%, driven by growth in our software firewall form factors and PANW SD-WAN. On free cash flow, Palo Alto Networks has delivered results that were above the rule of 50 for the last 5 years. We are unique in our ability to deliver top-line growth with leading free cash flow margins at a level that is best in class among scaled enterprise software companies. He also pointed to increased visibility for future free cash flows through deferred payments. On FY26 guidance. For fiscal year 2026, we expect NGS ARR to be in the range of $7.0 billion to $7.1 billion, an increase of 26% to 27%. On combined company FCF target, we're targeting adjusted free cash flow of over 40% for the combined company in fiscal 28, the first full year post-integration. This summary provides a comprehensive overview of Palo Alto Networks' 2025 Q4 performance, strategic direction, and future outlook, as presented during their earnings call.